BlackRock?
BlackRock controls the financial world and reaches into your daily life without you even knowing it. But why should you care? Because this company has its hands in nearly every aspect of the economy. Banks, pharmaceutical companies, media networks, covering almost everything. Imagine someone pulling the strings behind major banks, drug companies, and even the news you consume. That's BlackRock. Now, let me tell you just how deep this goes. BlackRock isn't just a player, it's the referee, the coach, and maybe even the stadium owner.
We believe we have great opportunities to transform our company again.
You know those big banks like JP Chase, Bank of America, and Citibank? BlackRock has control over them. You take your medicine from Pfizer or Johnson & Johnson? Guess what? They're connected too. Even when you turn on the TV, networks like CNN, NBC, and Fox News are influenced by BlackRock. This company even manages about 10% of all stocks traded worldwide. Sounds ridiculous, right? But it's true. And BlackRock's influence doesn't stop there. It reaches into the halls of governments across the globe, helping shape policies and guiding decisions that affect billions of people. This vast influence has allowed BlackRock to accumulate $11.5 trillion in assets as of the third quarter of 2024. That number might not mean much until you realize it's more than the combined GDPs of the United Kingdom, Canada, Russia, and India. It's not just big, it's gigantic. But think of it this way. BlackRock controls more money than half of America's total GDP, which was approximately $30 trillion in 2024. And here's the kicker. Both the US and Chinese governments rely on BlackRock to navigate economic crises. BlackRock has become the go-to fixer when things fall apart financially. Therefore, whether times are good or bad, BlackRock is always there, taking control and guiding the outcomes. Larry Fink, BlackRock's founder and CEO, didn't just stumble upon this success. He knew exactly what he wanted: to reshape the financial world.
Is the U.S. an exceptional place to invest for 5 years, 10 years, 20 years?
Growing up in a wealthy Los Angeles family, Fink initially pursued a career in politics. But he soon realized that real power lay not in speeches, but in money. Frustrated by the limitations of political influence, Fink saw finance as a means to make a broader and more lasting impact on the world.
This is not market movement. This is how much new money we receive from clients worldwide.
His journey began at First Boston, a prominent New York investment bank, where he rapidly climbed the ranks and became the youngest managing director in the firm's history. During his time, he helped establish the Mortgage and Real Estate Products Group, and his skill in the mortgage bond department earned him significant recognition. But let's get this clear, his career wasn't without setbacks. In 1986, a risky miscalculation led to a $100 million loss due to unexpected changes in interest rates. This failure could have ended his career, but instead of allowing the setback to define him, Fink turned it into a defining moment. Therefore, he recognized the critical importance of risk management and vowed never to be caught off guard again.
For mutual funds, what does it take them to really get in this race and dominate?
Using his connections, he founded BlackRock in 1988 with a core focus on risk management and financial analytics. His vision was clear: to build a firm that provided stability in an industry known for volatility. So how did BlackRock go from a small investment firm to a financial giant in just 34 years? The answer lies in technology and one revolutionary tool called Aladdin. Imagine having a crystal ball that sees into the financial future. That's what Aladdin is. It analyzes risks, assesses asset values, and predicts market movements with remarkable accuracy. Aladdin soon became the backbone of BlackRock's strategy, providing insights that other firms simply couldn't match. Larry Fink knew that the power of finance went beyond money. It was about influence, and Aladdin gave BlackRock influence like no one else had. The Aladdin system, which stands for Asset, Liability, Debt, and Derivative Investment Network, became a revolutionary tool in finance. It provided a unique ability to assess risks and make data-driven decisions that far outpace traditional methods. Today, Aladdin handles over 55,000 investment portfolios for clients worldwide, including central banks, sovereign wealth funds, and multinational corporations. It manages assets worth $21.6 trillion, a scale comparable to major global economies like the United States, China, and Germany. As of 2024, Aladdin's capabilities have expanded even further, integrating artificial intelligence and machine learning to predict market trends with even greater precision, giving BlackRock an unparalleled edge. This isn't just impressive, it's kind of scary. Because when everyone relies on the same system, what happens if that system has flaws? But Larry's ambitions didn't stop there. BlackRock's rise to power came with challenges. One of the biggest was a power struggle with co-founder Stephen Schwarzman. In 1995, Fink bought out Schwarzman's stake for $250 million, a stake that today would be worth over $12 billion. This buyout gave Larry complete control over BlackRock's future and solidified his vision of creating a financial empire built on understanding and managing risk. Let me ask you, is it a good thing for one company to have this much control? The 2008 financial crisis marked another defining chapter for BlackRock.
Shares spread in the month of September 2008.
Over 16%. Dow at the same time has fallen about 18%.
Larry Fink had been instrumental in developing mortgage-backed securities, products that played a significant role in triggering the crisis. Despite this, BlackRock's understanding of these complex instruments uniquely positioned it to help clean up the mess they helped create. When the crisis hit, the US government turned to Fink, awarding BlackRock contracts to manage distressed assets of crumbling banks. This move secured BlackRock's status as a critical player on Wall Street and elevated Larry Fink to one of the most influential figures in global finance. It was during this crisis that BlackRock earned the reputation of being the fixer of the financial world. While other institutions collapsed under pressure, BlackRock thrived by offering stability and solutions. Fink's strategic alliances with government officials and BlackRock's technological expertise ensured that they were seen as the go-to firm for managing financial chaos. This wasn't just about saving banks, it was about securing BlackRock's role as an indispensable part of the financial ecosystem. The fact that BlackRock was entrusted with managing assets during a time of crisis speaks volumes about the level of trust and influence it had gained. In recent years, BlackRock's influence has only grown. As of 2024, the company manages nearly $12 trillion in assets.
It hit an all-time high of $11.5 trillion in assets.
A figure that has steadily risen due to its acquisitions and expansion into new sectors. The company's strategic investment in renewable energy, healthcare, and technology startups has given it a stake in shaping the future of these industries. With its push towards environmental, social, and governance (ESG) criteria, BlackRock has also influenced how corporations prioritize their operations, promoting sustainability while simultaneously directing the flow of capital into green projects. In fact, by mid-2024, BlackRock had committed over $500 billion to renewable energy initiatives, solidifying its role as a key player in the fight against climate change. But Larry wasn't satisfied with just Wall Street. BlackRock expanded into exchange-traded funds, ETFs, allowing everyday investors to access diversified investments. Therefore, by mid-2024, BlackRock's ETF assets under management reached $3.86 trillion, making it the dominant force in the ETF market. ETFs became a key part of BlackRock's growth strategy, offering stability and diversification that appealed to both institutional and retail investors. By creating products that allowed even small investors to benefit from large-scale financial movements, BlackRock positioned itself as the bridge between Wall Street and Main Street. Larry also recognized the growing importance of technology in finance, leading to the further development of Aladdin as a cornerstone of BlackRock's success. By incorporating advanced analytics, Aladdin provided insights that transformed investment strategies, positioning BlackRock as a leader not only in finance, but in financial technology. By managing over $21.6 trillion in assets, Aladdin has become one of the most powerful financial tools in the world, influencing decisions that shape the financial markets. As of 2024, Aladdin's integration with blockchain technology has begun, aiming to provide even greater transparency and security in asset management, further solidifying BlackRock's technological advantage. BlackRock's rise to power has led to a significant concentration of influence over global finance. While its growth has brought innovations to investment strategies and global financial stability, it also raises serious concerns about transparency and accountability. Such concentration of power is alarming, especially when private corporate interests may align too closely with national governments. Competitors like Vanguard and State Street pale in comparison, which only adds to the concerns about monopolistic control and the far-reaching impact on the world economy. These concerns make it crucial to explore possible solutions and measures to ensure that no single company holds unchecked power over our financial systems. One of the biggest concerns surrounding BlackRock's dominance is its ability to shape government policies and regulations. With Larry Fink's close connections to powerful political figures and global institutions, BlackRock's interests often align with, and sometimes even dictate, governmental actions. This blurring of lines between private corporate interest and public policy raises ethical concerns. Should a company that holds such influence over the world's finances also have the power to influence public policies that directly impact millions of lives? The answer is far from simple, and it calls for greater scrutiny and potential regulatory reform to ensure that no single entity can hold such unchecked power.
About BlackRock, of course, $4 trillion of that $11.5 trillion.
Moreover, BlackRock's use of the Aladdin system has created a feedback loop within the financial industry.
Both alternative managers as well as data providers is a key tenet of their strategy.
Aladdin's data-driven approach influences decisions across the board, not just for BlackRock, but for the institutions that rely on its data. This means that the same algorithms and risk assessments are being applied across multiple entities, potentially creating a homogeneous financial strategy that could amplify systemic vulnerabilities. If every institution uses the same model for risk management, then the entire financial ecosystem could be exposed to the same weaknesses, making it more susceptible to crises. To address these risks, regulatory bodies should consider promoting diversity in risk management strategies and encouraging financial institutions to adopt varied analytical tools. For example, introducing measures similar to the Dodd-Frank Act,
a more precise approach rather than kind of a blunt instrument,
aimed at increasing transparency and reducing systemic risk, could be crucial for entities with influence comparable to BlackRock's. By ensuring that different firms do not all rely on a single system like Aladdin, we can foster a more resilient financial environment where diverse approaches reduce the likelihood of systemic failure. In addition, greater transparency in BlackRock's operations is essential. BlackRock must be held accountable to the public given its extensive influence over the global economy. Governments and regulators could enforce stricter reporting requirements for the firm, ensuring that its practices align with broader public interests rather than just corporate profit motives. For example, mandatory disclosures about the extent of its political lobbying and its influence on policy decisions could help shine a light on the interplay between corporate power and public governance. In the end, BlackRock's influence is a double-edged sword. It has brought innovation and stability to many aspects of the financial world, but its unchecked power raises questions that we can no longer ignore. The scale and reach of BlackRock's dominance serve as a reminder of how critical it is to balance corporate power with public accountability. We need to start asking the hard questions and pushing for reforms that ensure a fairer financial system for everyone. If you found this video helpful, share it to help raise awareness about the immense influence corporations like BlackRock have over our financial system. Don't forget to subscribe to our channel for more in-depth analysis and discussions on the forces shaping our world.